So is the correction over? After last week's big sell-off, some folks were selling off the whole economy, saying the market correction was just the beginning of a long-term economic contraction. But look what happened today. Big action today. Does today's bullish action mean the recession bears were all wrong? Gang, what do you think?
David, you know I've been one of the big bears all the way down. I think price today dictates that we've seen a low for now, and I think we'll probably have a decent December. I don't know if we're going to skyrocket from here, but I saw enough people turn very bearish after the drop, and the end of the world is probably not at hand. I saw enough today to tell me I think we're going to get some upside testing in the weeks ahead. Then I'll reevaluate from there.
You know, I've never really been a bear. I've been more of a baby cub, but I hate to be the bearer of bad tidings, no pun intended. I don't think that we're going to get a Santa Claus rally here. I don't think companies are incentivized to say that we're going to get a boost in earnings, so you're not going to see multiple expansion. We just heard President Trump double down on tariffs potentially with iPhone, so I don't think we're getting trade relief. So that means you're hanging your hat on the Fed, and at the end of the day, I think that the POTUS has been very sticking his nose in the middle of things. I think that incentivizes Powell to be a little bit more hawkish. So I don't see where the relief is coming from.
By the way, you were mentioning the iPhones. The president had an interview just less than an hour ago with the Wall Street Journal in which he said, talking about possible tariffs on iPhones coming from China, he said, I can make it 10% and people could stand that very easily.
Oh, fabulous.
I would say this felt to me like a dead cat bounce. You had some good news, possible expectations of G20 going a little better. You had some oil conversations between Russia and the Middle East. The way I view it, taxes 2.0 is dead. GDP is going to have a slowdown. We're already expecting third quarter to be slower than second quarter. And then you have Fed hike rates looming. I do not see the bull market continue. I think we're going to see continued volatility.
Yeah, I'm with Robert that I'm really looking to see what happens at the G20. It doesn't look like the president is ready to take his heel off the neck of the Chinese. At least at this point, we'll see what comes out of that meeting because he does like to make a deal. But there are a lot of things I think to still be optimistic about the economy, and that's why the consumer optimism numbers, business confidence still is coming in at very high numbers, even though we've seen volatility in the market because people are still overall encouraged about the economy. Businesses are encouraged that regulation is not strangling them. So I think holistically we're still seeing many encouraging signs in the economy. And listen, people were looking for any reason to sell off. I mean,
and I got two points in your favor. One is that there was just a survey of economists that the Wall Street Journal did looking at third quarter growth because they're coming out with another print this week, or at least a look back at third quarter growth. They're steady. They think it's going to stick at 3.5%, which is not a recessionary economy. And the retail sales over the weekend look pretty good.
Look, I'm not a bull.
Yeah.
I'm just not as bearish anymore. And just realize we just dropped 2,000 Dow points in 9.5 days.
True.
So we're due to bounce. My biggest issue is not necessarily here. It's the Eurozone. You have Germany, the engine of Europe, contracting last quarter. You also have Japan contracting. And if Germany's contracting, what about the rest of Europe? And that's all going on while interest rates are still negative and they're still printing money, not to mention what we're seeing in Italy, in Paris, and the Brexit. So I think the big issues come from here. And I don't think we're going to be immune as we move forward.
Well, I think Gary brings up a great point there on Europe. I would say positive signs on Brexit so far, at least with Theresa May's announcement today. The far right in the UK doesn't like it. But what I'm really looking to geopolitically is what happens in this Russia-Ukraine crisis. I mean, Germany still clearly wants to buy gas en masse from Russia. So if there's a lot of geopolitical instability there as it relates to Russia and Ukraine, that could affect the gas market.
Of course, by the way, one thing that Steve Forbes suggested is that there may be some deal with China at this G20 meeting on natural gas. Maybe they'll manufacture more of these facilities for our liquid natural gas, et cetera. Something like that might happen.
It's possible, David, but I want to go back to Robert for a second, because if you come back to the consumer here in the U.S., even though there is some consumer optimism, don't you feel like that is already priced into the market? And do you think there's enough optimism to push growth into that double-digit arena where we can see some multiple expansion from here?
I'm nervous, so there's no question, Carol. I was going to chime in, but you you kind of segued me in perfectly, so thanks for the softball. The last time we had consumer confidence this high was in the early 2000s, and then the dot-com bubble came. So that was the last time we saw this type of consumer confidence level. So the answer is we cannot predict that consumer confidence is going to predict where the markets are going. Yes, we probably had some decent Christmas sales, but I think as Gary pointed out, there's still a high ability to use credit cards, and I think we're going to talk later on the show how people are taking cash out of their house.
But, you know, the investment in workers has been extraordinary. I mean, it ain't for nothing that we have more jobs and we have people looking for jobs. It's because for every person that a company hires, they have to pay $10,000. That's a huge investment companies have made for the long term in expansion, right?
Well, you're getting that at the same time that we're getting information coming out from GM today about the layoff in workers. You're still getting very low wage expansion. And if you talk to Americans, they are not feeling that level of wealth, which is, I think, one of the reasons why they're going to the credit side of things in order to try to feel a little bit more well off. So I don't think that that's translating at the level that perhaps we had hoped it would.
Yeah, wages feel good off literally the worst scenario we've seen in 8 years where there has been no wage increase. It's still actually trending at or below inflation. So we've only had one good quarter of where we're excited about wages. It hasn't been more than that.
But hold on. We've had a real good economy over the last year. We've had very strong GDP. Unemployment's been very low. If that can continue, I think the market can resolve itself. My worry is the economic cycle, upwards and downwards, has not been extinguished, and I think we may be in for some reckoning here because of how much debt, how much deficits. And again, a lot of countries around the globe right now, I think, are in pretty big trouble because of that.
But, Gary, we all applaud where employment is. We should just be clear here. There's a huge skills gap. Yes, there's a tremendous amount of jobs available, but the participation rate is still around 63%. So it's not all of a sudden there are these new jobs are being filled. They're not being filled, and we actually have a skills gap to fill those jobs.
Well, we also, I mean, there's a reason why companies spend $10,000 per employee, because a lot of training is going on right now, and hopefully that training will play out in terms of our increase in production skills.
I mean, I think to back up what Robert just said, that's why we saw Amazon choose where they chose, New York and the Washington, D.C. area, because they everywhere else they look, they could not find the skilled workers that they need. And if Congress wouldn't like to get anything done in a bipartisan fashion over the next 2 years, which they probably won't, maybe working on.
All right, you just depressed me. If we have to depend on Congress for anything, I don't think it's going to work.